Good morning or good afternoon, everyone. This is Adam Linneman here, the Green Executive, and my partner Jeff Heller with us today, also with the Green Executive. Jeff is supposed to be putting on this presentation today, but he lost his voice yesterday afternoon. So while Jeff was supposed to be doing the majority of today's presenting, I'm going to go ahead and be taking over today's webinar with Jeff co-hosting with me on this today on Profit First for Snow Pros. And so today I really wanted to talk a little bit about profit and why profit really should be the first thing that you think about in your business. Oftentimes we think of profit as a dirty word, and profit really isn't a dirty word, because if we don't have profit in a business, we can't use that to invest into our business, and we can't also use that to invest into equipment, to pay our team members more, and to maybe do some things such as profit sharing inside of our businesses. So that's why profit in a business is so important. It's because you have to have that in order for your business to be truly long-term sustainable and allow it to be able to grow into the next level in your business. So as we move through the slides today, I'm going to go ahead and do Jeff's intro. Jeff is the president of Innovative Maintenance Solutions located in Indianapolis, Indiana. Jeff is also a certified Profit First professional with the Green Executive, our consulting firm. He's a certified snow professional with SIMA. SIMA is the Snow and Ice Management Association. And he also sits on the board of directors there. And he's the vice chair of the Snow and Ice Management Association and the foundation board of directors. So, Jeff, thank you for still being here today, even though you can't speak much because of your voice, but I hope the intro was okay for you. All right, got a thumbs up.
Perfect.
A little bit about myself. So if you don't know me, my name is Adam Linneman. I'm the founder and CEO of Linneman Lawn Care and Landscaping. Next year will be 30 years in business. Pretty exciting. Founder and partner at the Green Executive. I'm a certified Profit First professional as well, certified in QuickBooks as a pro advisor. My wife, Sarah, and I are both Element certified consultants. We went through some training with Mark Bradley back years ago and got that status, so we're proud of that. And also, I'm an egghead and a certified barbecue judge. So if you don't follow me, check out a little bit more of some of my good cooks that I cook on the Big Green Egg. I love barbecue. So let's start with this. The question isn't how big the business is, it's how healthy is your business. It's a mindset trap that we often fall into of always trying to reach that top line sales. And in all reality, we really should be focusing on how profitable can we keep our business. One of the things that I highly dislike is when some of the national trade magazines put out the top 150 companies when it comes to revenue inside the national publications. And I could care less about that. What I'm really interested in is what's the top 150 most profitable businesses? And I'd love to see who they are and how are they doing that. So I ask you that, or I ask you that question, and I talk about that as we transition into this next slide. And I ask you, and please put comments in the chat, some of your answers. But what would you rather have? Would you rather have $1 million business at 3% profit, or would you rather have an $850,000 business at 12% profit? Take a look at those numbers and tell me what you'd rather have, A or B. Mark says B. All right. So we're getting some answers coming back. I personally would rather have B. And the reason why that is because typically an $850,000 company might be a little bit easier to manage. You might have a few less team members that you're dealing with, and you're obviously making much better profit margins. But, you know, you could maybe persuade me to think about the 1 million at 3% if you have a strategic plan in place of why that is. But in most situations, obviously, in this scenario, the more profitable a company is, the higher dollar amount that you're going to have at the end of the day when it comes to the percentages. One of my favorite slides that I like to share is this one here, and that is profit feeds the family, revenue feeds the ego. Profit feeds the family, revenue feeds the ego. Make smart purchasing decisions within your business. Okay. Stop trying to keep up with the Joneses, always buying the brand new equipment, trucks when you don't need it. All right. Think about profitability and not so much top line and feeding your ego with sometimes some of that shiny new equipment that you're not even using and sitting inside your shop or yard facility on a regular basis. All right. So what makes a business valuable? Let's discuss that. People, processes, and profits. That's what makes a business valuable. For people, it's, do you have the right seat of the people on your bus, right? So are they seated in the right places that your company needs them? That's why people make a business valuable. Processes, systems in place like a good software. All right. When we implemented Element software in our business, we utilize it from the time the phone rings all the way through invoicing. And it's our CRM, it's our estimating software, it's our budgeting software, it's our time management software, it's our calendars. Have a good software in place to keep up with your processes and streamline your business. Nobody wants to purchase a business or even run a business that doesn't have processes in place. So find a good software to make sure you have good processes in place. And then profit. Profit is something that makes a business valuable. And one of the things I want you to be thinking about is profit does not equal owner's pay. Oftentimes, landscape contractors, snow contractors that are running businesses, they think about profits and they think about that's what the owner's pay is. A healthy, valuable business will pay the owner a fair salary and turn a healthy and fair profit on top of that. So those are the three things that make a business valuable. This is a staggering percentage here, and I've seen the percentage as low as 75%. I've seen it as high as 85%. But on the historical averages, according to Mike Michalowicz and his study with the book Profit First, 83% of small business owners are living paycheck to paycheck. This is why most businesses fail, and it's because they don't know what to charge. All right. They don't make good purchasing decisions or financial decisions. Get yourself a budget in place and eliminate this problem by paying yourself a fair salary and turning a healthy profit. So we're talking about Profit First today and Profit First for Snow Pros. And I ask you, whether you're a landscaping contractor, a snow professional, maybe you do both, but I ask you, have you ever said these things to yourself? I never have any money to pay my taxes. I don't even take a paycheck. How about my accountant says I'm profitable, but where is all the money? Profit First solves this issue. All right. So stop saying these things, because Profit First solves these issues if you ever have these types of situations that pop up to you. Many owners pay themselves if there's money left over, and then they take a draw when they can and do not pay themselves regularly. And Profit First solves this. So look at this method as we discuss through the formula here at Profit First, and be thinking about that. The last thing I wanted to mention to you is, just because you see a profit margin on your profit and loss statement, oftentimes contractors don't actually have that number of cash in the bank. And the reason is because many things that deal with cash flow isn't always necessarily on your profit and loss statement, but there's also things that are on your balance sheets that eats up cash as well, such as loans and different types of liabilities. So if you have a profit and loss statement and it's showing a 10% profit on $1 million, $100,000 there, but you have liabilities and loans over in your balance sheet, and you say you pay out $100,000 in monthly payments on your equipment and things like that, that sits on your balance sheet, that's why you don't have that $100,000 in your bank account. And that's where the money's going. It's because your P&L may be showing you're profitable, but you have to take into consideration with cash flow money that's going out to reduce your liabilities on your balance sheet. So let's redefine profits. All right, profits is not what's left over after paying everyone else. They belong to the shareholders or the owners of the business, and it shouldn't be used to finance the operations. And profit is not an event. Profit should be a habit. Don't think of profits as your scraps or your leftovers. It really should be your reward. Okay. And like I mentioned earlier, it's not owner's pay, and profit should be a routine occurrence. And we'll talk about how you can make profit a habit here in just a little bit as we go through the presentation. So an axiom. What is an axiom? Have you heard of that before? An axiom is a statement or proposition which is a research that and Google that, and you'll find out that some of these may not be 100% as accurate as what you think they are. We as a country have an addiction to axioms, okay? We realized, after all, the world isn't flat. When we thought it was, we now know it's round. And another axiom that we used to believe in is sales minus expenses equals profit. Well, now we flip that formula, and we'll talk about that, and that's why we make profit first. So now we're going to be looking at it as sales minus profit equals your expenses. And I can prove to you why when you put things first, such as profit in your business first, you're going to get much more return out of it. Typically, whatever comes first in your life, you pay the most attention to. And so if I were to ask you, what's the most important thing in your life, Jeff, you were probably going to say family. And you pay the most important, you pay the most attention to your family, right? Well, in your business, it should be your profits. That's why we say sales minus profit equals expenses. And one of the things I wanted to mention is a lesson from 30 million businesses is that historically, the number one way that people are able to retire is through a 401k. And when you have a 401k with inside your business, you take the retirement fund out of your paycheck before you have the net take-home pay. So you have your gross, and then you have your 401k contribution, and then you have your net take-home pay. And that's why the 401k has been the most successful retirement strategies, because that's being made priority first when it comes to retirement. So that's the lesson in the 30 million businesses on that study. So let's talk a little bit more about law. All right. Parkinson's law is if a resource is available, you will use all of it. So I ask you, and if you guys would all please consider commenting on this chat here. If I were to give you, let's say, $10 million to go out and build a new house, how much money would you use to go build a new house? Please put inside the chat on the side there below. I'd love to see some answers. If I were to give you $10 million to go out and build a new house, how much money would you use to go out and build a new house? All right, so we're getting some answers to come in here. And I love some of these answers. So I'm getting like some very frugal people. Most of the time, people will say, well, I'm going to use $9 or $10 million. And that's the problem, is that they are given a large sum of money and they utilize all that money. Well, with Profit First, we break things down into smaller buckets, and we'll talk about that here in just a little bit. But that's what Parkinson's law is if a resource is available, you're going to use all of it. Okay. When there's less of it, your behavior changes. You become prudent, creative, and you find a way to get the most out of what you have. Okay. If there's anybody here that's on today's webinar and they're brushing their teeth at home, so the toothpaste tube lesson, all right, when that tube of toothpaste starts to get empty, what are you doing to still brush your teeth with that tube of toothpaste? Maybe you're rolling it up and you're trying to squeeze out as much as you can. Maybe you're taking that tube of toothpaste and you're cutting a corner out so you can get the toothpaste out the bottom of the tube. When a resource is available, you're going to use the most of it. And the Profit First methodology allows you to think like a tube of toothpaste and use your expenses that you have in your business to still get as much as you can out of them to make your business run efficiently. I like that comment there, Mark. You do squeeze the heck out of it. Yes, you do. All right. So with Profit First, it allows for bank balance accounting. And so with Profit First, you have 5 core bank accounts. Okay. Traditionally, you might have one bank account now, and that's probably just your regular income account. With Profit First, we break it down into 5 core accounts. And those 5 core accounts are your income account, your profit account, your tax account, your owner's pay account, and your operating expense account. Those are your 5 core accounts: your income, your profit, your tax, your operating expense account, and your owner's pay account. So you have 5 core accounts. And what that allows you to do is to make good financial business decisions by looking at your bank balances and not necessarily having to look at your profit and loss statements so much and on a regular basis. You can make good business decisions by how much money do you have in your account. And when you break them down into smaller plates, that's when you can make good and better decisions. Very, very similar to like the old envelope system that maybe your parents or grandparents may have used back in the day. If, let's say, grandma or grandpa came home with their paycheck and they had cashed it at the bank, maybe your grandparents used envelopes and they titled them for groceries, for entertainment, for mortgage or their rent, and they take that cash that they have and they divvy it up and put it into different envelopes. That's what we do with Profit First. We use bank accounts. So take your profit first always. Focus on what comes first. All right? Focus on what comes first. Now we're looking at this as sales minus profit equals expenses. We talked about the proof was in the 401k, right? That's traditionally been the most successful retirement plan because they're taking the retirement first before they have their net take home. And, we're going to dig in here just next here, since we just got through Thanksgiving, and tell you about how to break those down into those accounts, as well as we're going to kind of move that over into smaller plates. So we're going to kind of use that analogy. So step 1 to Profit First, multiple small plates. All right. Years ago, our plates were much smaller that we ate off of. I'm talking 50, 100 years ago, our plates were much smaller than what they are today. This is the reason why Americans are so fat. Okay. It's because we have bigger plates now. But I encourage you to use bank accounts, multiple bank accounts versus just one bank account. So we're going to use this into multiple small plates. Our core accounts are, like I mentioned, the income, the profit, the tax, the owner's pay, and the operating expense. Step 2, we're going to use allocation percentages. We're going to break them down into percentages, okay? So take a look at this chart here, and these are targeted allocation percentages of where fiscally healthy companies should be hitting to run a successful business. And this does not necessarily pertain to the snow business, the landscaping business. This can pertain to any service business. Are you hitting any of these numbers? Which column do you fall into? So we have column A, B, C, D, E, and F. Which column do you follow into? And determine those percentages. And that's how you should be operating your business. Now, traditionally, in the United States, and maybe it's different if you are in Canada, but traditionally the 15% I have learned has been a little bit high based off of working with landscaping companies. I am typically seeing the tax percentage being sufficient around the 7 to 10% range. But just keep in mind that the percentages need to equal out to 100%. As you look at this chart, I oftentimes get some questions, and some of the questions are, well, why does owner's pay actually go down the bigger the business is? Typically, the reason why owner's pay goes down is because if a business becomes to be a $5 to $30 million business or a $30 to $50 million business, the owner is getting shareholder distributions and draws versus actual salary so much. So that's why that goes down traditionally there. The last thing I wanted to mention is on operating expenses typically goes up the bigger the business is because there's more overhead. A business that's doing 1 to 5 million or 30 to 50 million, okay, those businesses are going to have more administrative staff to support the business. So that's why the operating expenses typically go up because of overhead and different overhead cycles inside of a business. Okay, let's go ahead and go to step 2, vegetables first, profit first. All right. We would all be healthier if we ate our vegetables first, but we don't. We ate the dessert. Always follow the sequence. So what I encourage you to do when you implement profit first is you take your money and you allocate it to your income account. From there, you distribute it into your other 4 accounts, your profit account, your tax account, your owner's pay account, and your operating expense account. And then any money that is inside your operating expense account, you use to pay your bills. A PFP is someone like myself or Jeff, that's a profit first professional. We help contractors determine their current allocation percentages and then help them transition to the targeted allocation percentages, which would be more so on the chart that we just shared a little bit ago. Step 3 of profit first, remove the temptation. I told you there's 5 core accounts. That's true. I recommend you opening up 2 more additional accounts and title those your profit and tax accounts also, but those are going to be your profit and tax vault accounts. And you want those accounts at a total separate bank. All right, so you have your 5 core accounts at one bank, income, profit, tax, owner's pay, and OPEX. I'll repeat that one more time. At your main bank, you want to have an income, a profit, a tax, a owner's pay, and an operating expense account. And at another bank far away, one that you can't necessarily get to very easy, you want to have 2 more accounts, and those are your vault accounts, and those are your profit and your tax vault accounts. And the idea is every time you do your allocations, is you move the money from your profit and tax core accounts to your profit and tax vault accounts, and you move it out of sight, out of mind. You do that because if I were to put all this money in front of you and leave it in your core account, you're going to be tempted to use it. Okay? And same scenario with this picture here. If I were to put 5 or 10 cookies on a plate in front of you, how many are you going to eat? You're probably going to eat more than just one. You're probably going to eat 3 or 5 or 9 cookies out of everything that's on the plate. So you want to move it out of sight, out of mind, and remove the temptation. Step 4, profit first. Be consistent. So you want to do your allocations on a weekly basis at first. Now, profit first teaches us to do it twice a month, but I recommend doing your allocations of moving the money around every week. So what does that look like? Well, that looks like every time you go to the bank to make a deposit, you deposit your money into your income account, you go back home, and you allocate from the income account, you do bank transfers to your profit, tax, owner's pay, and operating expense. So you hold all your money if you want to for a week, or if you go to the bank twice a week to make deposits, that's fine too, but you want to allocate once a week to those other accounts. Quarterly profit distribution. Every quarter, Profit First recommends that you celebrate. You celebrate with a portion of your profit. Well, what does that look like? Maybe if you build up $10,000 in your profit account at the end of the quarter, maybe you take 10%, $2,000, and you celebrate as a reward. Maybe you take that $2,000 and also consider doing some sort of profit sharing with team members in your company. We also recommend maybe taking a very good portion of your profit account and using that to pay down debt. Okay, that's how you can be a debt-free company, is take half of your profit account every quarter and use it to pay down debt. So profit is so important to have in your business. It needs to be a priority. And just like I mentioned earlier, don't think of profit as being a negative, dirty thing. You have to have it to be a truly sustainable business. So let's talk about some ways to increase profit. Okay, well, one of our most expensive expenses, right, is labor. So on the bottom one there, we have reduced expenses. Well, how can we be more efficient with our labor? We talk an awful lot about that, of how we can be more efficient with our labor on a lot of the sessions and webinars that LMN puts on. That's what they always talk about, is how can we be more efficient with our labor? We need to reduce our expenses as a way to increase profit. We can increase our margins, and we can also increase our sales and hold our expenses steady. How about some other ideas? Super profit. All right. Are you offering snow removal services already, but maybe you can add on snow removal off-site hauling? That would be an excellent way to make some additional money, and typically that type of service offering is very profitable. Maybe you have a liquids program. Maybe you're spraying brine versus using so much granular. That can be a super profit type of a service offering. Offer backup services for sites where vendors have failed. You can do this on a time and material basis. Different ideas there with super profit. When it comes to landscaping, I think of landscaping as what other services can you do while you're already on site? Maybe it's tree and shrub fertilization immediately when you do an install. Maybe it's putting 10 boulders into a landscaping project that's only going to take you an extra hour or two, and you can charge an extra couple $1,000s just for bringing some boulders in. All those type things are things that I consider to be super profit. So in the chat, tell me what is your most profitable service and why? Everyone, please chime in, and would love to know what is your most profitable service and why. Mark says snow. Sarah says snow. Sanding, I'm sure, / salting. That's all we do. Okay. See a lot of snow in here. Spring cleanups, very efficient. All right. So yeah, what is your most profitable service and why? Fertilization. I love fertilization. Jose, I love fertilization because you have a material you're putting down, you have a markup on your material, and you're turning a profit on the material. You obviously have your labor, and you should be performing that service with a one-man crew. And a one-man crew is always going to be your most efficient crew versus a 2, 3, or even 5-man crew on other service offerings. So absolutely, I love fertilization. All right, leverage your vendors. Folks, be thinking about how you can leverage your vendors. We use a marketing company at my landscaping business that helps us do some blogging and things like that. And I used to pay our marketing company, the lady that's in charge of it, her name is Leslie. And I used to pay her by credit card every month when she would send me her invoice. And one way how I realized that I can keep more profit in my landscaping business is by leveraging my relationship with Leslie and offering to pay her 3 months in advance, but by check. And she came back and told me that she would give me a 10% discount if I did that. It's a win-win for her because she gets cash flow up front. I get a pretty good discount, and it helps me with my profitability. So leverage your vendors. Can you establish terms with your vendors or take advantage of early order programs? We spend about $100,000 a year on fertilizers, herbicides, pesticides with our lawn care programs. We spend several $1,000s a year on ice melt products, on salts and different things like that. So if you can take advantage of buying the products early, and if you have room to store it, there's oftentimes significant savings that could ultimately go down to increase your profitability. Let's talk labor. Everybody loves or hates this section, but let's talk labor. Are your routes optimized? All right. It's no secret that we love LMN software. We use it in our own landscaping company. Every time our landscaping and fertilization routes are on the schedule, we're optimizing those routes with the use of the software. All right. Optimize your routes. That can save you hours and hours a week of drive time if your routes are optimized. And if they're not optimized, you could be losing out on a lot of time there as well. Crew sizes. Everybody wants to talk about crew sizes. What's the most efficient crew size? I challenge you to think about fertilization, keeping that a one-man crew. I challenge you if you're doing residential mowing, and this is true 98% of the time, but if you're doing residential mowing, if you can do it with one person, great, but I would have absolutely no more than 2 people on a residential mowing crew. I see crews that go out with 3, 4 people for residential mowing. It just doesn't make sense when you really put the numbers down on paper and you look at the time that's wasted with the windshield time and the crew time. If you do larger projects, maybe you take care of cemeteries, maybe you take care of HOAs. Okay, maybe you send 2 crews of 2 to that property. But if you're doing a lot of residential, no more than a crew of 2. I talk to contractors. I work with contractors down in Florida, and they send 4 or 5 crew members to HOAs. And let's just say they have a crew of 5 at a HOA to doing a large commercial property, and then one of the team members, before they come in for work in the morning, maybe they call in sick. And I ask, well, did the job still get done for the day with 4 versus 5? And they say yes. So I'm thinking, well, why are you paying that 5th person then if the work's still getting done? Enclosed trailers can be a huge time saver when it comes to labor from loading and unloading. And then last but not least, I use this as a talking point all the time, ice machine savings. I work with a company that had 3 crews, 3 people per crew, and they were allowing their crews to stop off at gas stations every single day to get bags of ice. When we calculated the 5-minute drive to the gas station and then the additional time back to the first property that they were going to serve, at 3 crews, at 3 people, when we started doing the calculation of what that's costing them with their not only wear and tear of the vehicle and the fuel, but also the time that they're being paid to go get bags of ice, that you can buy yourself a $4,000 or $5,000 ice machine and put it into your shop in about 6 months. Okay, if you take that savings into consideration. So stop making those gas station stops. They're killing you. How about waste? I love this slide. This slide actually came from LMN. So this slide was in a deck on one of the budgeting workshops. And I love this slide because it talks about how much waste costs a company. Okay, so how can we grow by 20%? Look at some of these numbers. It's really interesting. So let's move down to how about forgetting tools and materials? If your crews are coming back to the shop because they forgot something just 2 hours a week at 36 weeks a year, and let's say that your billable rate is $80 an hour, your lost opportunity is $5,800 a year. Another example, smoking, texting, phone calls, social media. If you're wasting 5 hours a week at 36 weeks a year between all your team members, look at that, $14,400. All right, the waste needs to stop. It needs to be drastically cut down. This opportunity is huge in costing you profit in your business. I love this quote, busy work is not profitable work. I oftentimes ask contractors, how's business going? Are you doing good? Oh yeah, we're keeping busy. Well, are you keeping busy or are you keeping profitable? All right. I want to hear that you're being efficient, and you're being efficient with your time, and you're being a very profitable business, and you're not always doing busy work. How about equipment? All right, enclosed trailers, on-site cameras is a huge one. That's something that's specific to the snow industry. Frost Solutions has an option to put on-site cameras up on poles on commercial parking lots, and you can monitor the pavement temperatures. You can have video and photos of the sites to where you don't have to have a team member there monitoring all the time. All right. Take advantage of equipment to reduce your labor to make more profit. How about ride-on spreaders and sprayers when we're talking, fertilization, or if we're talking spraying brines or putting down granular products on sidewalks? Have that equipment. Snow plows versus snow pushers. Do you have the right equipment on the right site? You can't be doing, 5, 6, 8 acre properties with snow plows all the time. You have to have efficient equipment on site. Materials, buy in bulk. Liquids versus granulars. Are you making your own? And then last thing I want to mention is have a plan in place in case there's shortages. While you want to leverage your vendors, you also want to have relationships with your vendors. So have a couple different options where you can buy salts and brines and ice melts, fertilizers, landscape materials, all that type stuff. Have a backup plan and build a relationship with several vendors. Ways to increase cash flow. Prepaid discounts or retainer fees. Okay. Maximize the use of seasonal or fixed cost contracts. Set your terms to due on receipt or net 15 days. Stop working for brokerage companies and for big box store companies that pay you 45, 60 or more days out. All right. They're the ones that are hurting the industry. You need to be paid in a fair and quick manner. Have credit cards on file. And if you're taking credit cards, making sure that you're charging the person that is using the credit card a credit card fee, or I'm going to stress, or you're taking into account the credit card processing fee into your overhead in your business. So, and when I say in your overhead, basically that means everybody, all your customers are paying for that expense. Pre-invoice for your services as much as you can. You can do that with lawn care. We used to mow for a month. Then we used to give 30 days terms and then collect payment. By that time, it was 60 days into it. We then switched our mowing agreements to seasonal. And we now, or at the time, I should say, we were invoicing in 9 equal monthly payments starting March through November. And so we were getting money up front. We went to a payment plan and we got cash flow up front versus invoicing after the fact. So think about that as well. And it's so important to not let your HR accounts receivable get out of control. They really should be looked at on a weekly basis. Past due reminders should be sent out on a regular basis, and definitely stop the services to those clients that aren't paying you in a timely manner. I challenge yourself to ask yourself these 3 questions before you go out and make any purchase. I don't care if it's a $10,000 lawnmower or if it's a $100,000 dump truck. Ask yourself these 3 questions. Is the purchase what I'm about to make good for the company? Is the purchase what I'm about to make good for the client? Can the purchase wait? That's the sniff test on if what you're about to make on that purchase is going to be good for you, good for your client, and is it really necessary right now? I ask you today, where will you be a year from now if you don't solve your profitability problems today? Profit in your business must come first. And as I like to say, if you can't pay your bills, you can't afford your bills. Make profit a habit in your business, not just an event. Join our Profit First for Snow Pros group on LinkedIn. Jeff is running that group there. We have about 100 members or so right now, but join in there. We're always putting good content in there. And if you need any help with implementing the Profit First methodology, like I said, myself, Jeff, and my wife, Sarah, are both Profit First professional certified coaches. We can help you with that if you have any interest in that there. And also our Profit First peer groups. You can learn more there by scanning the QR code or visiting our website, profitfirstpros.com or thegreenexecutive.com. The last thing I wanted to mention is the 1% challenge. And the 1% challenge is I can guarantee every single one of you on this call today that if you put 1% Even if you don't implement Profit First and open up the 5 bank accounts, if you open up one additional bank account today and title that your profit account and start putting just 1% of every deposit into that 1% account, you will be guaranteed a profitable business. Thank you so much. I really appreciate it. Brittany has a few, I think, just a couple slides to talk about on the mastermind sessions that they have still in the rest of 2023 and into 2024. So I'll turn it over to Brittany, but thank you so much.
Yeah, I just wanted to say a quick thank you to Adam and Jeff. Thank you so much for, deep diving into, Profit First and how it'll transform your snow business. And for everyone watching, the Linemans and the Green Executive, they have been such a pivotal part to the LMN crew here and just really helping shape our business. So as he was mentioning, he used to help us out with some of our budgeting workshops. So we've built on that. And we have 2-day mastermind sessions. I've dropped the link in the chat over there, but we really are just growing our foundations on, strategic planning and efficient operations and whatnot. So if you're interested in joining us on our tour, we're just finishing up our winter tour here for 2023, but we have a whole bunch of dates coming up for 2024, January, February, March. Scan the QR code or go to golmn.com/workshops just to get some more detail. And if you're interested, use Web10 for 10% off those tickets. And just an FYI, each ticket accounts for 4 seats. So you and your company are able to join us. So just remember that when you sign up, it's for 4 seats.
Awesome.
And then just on top of that, just wanted to quickly mention that we have our Mastermind weekly webinars, which are very condensed short versions. We did a nice deep dive today with Adam and Jeff, but we really just go over some hot topics, 30 minutes with some industry vets. Mark Bradley is on majority of the calls. We have Mike Lasecki, we have Janet Bradley, we had Peter from Knowledge Tree as well this past week. So really just picking the brains of some industry experts. If you're interested in joining us, it's 30 minutes, 12:30 p.m. On Wednesdays. Just scan that QR code and it'll take you to the next week's sign up. And then lastly, just wanted to quickly plug here that today is the last day to take advantage of our Black Friday deal. So if you're interested in signing up for Greenius and LMN, we have some amazing offers here for Pro for 3 months for free and Greenius for 2 months free, and along with a discounted rate on onboarding. So just go ahead here and scan the QR code for golmn.com/Black Friday. And with that being said, I just want to give a great big thank you to Adam and Jeff for joining us today, and to let everybody know that you'll get a recording of this in a post email. So thank you so much, everyone, for joining us, and hope to see you guys soon. Thank you, Adam and Jeff.
Absolutely.
Take care. Bye-bye.
Bye-bye.